Hello and welcome to today's edition of Beyond Reasonable Doubt. My name is George Wong. Today's topic we shall be looking at life insurance, the possible scenarios of a rejection. Why is a life insurance claim rejected? So once more, this is September Life Insurance Awareness Month. And this series, Beyond Reasonable Doubt, is intended to bring awareness and to engage the community in a discussion to clarify some of the myths surrounding life insurance. So let's dive right into it. So here I compiled a list of the most frequent reasons why a claim for life insurance can be rejected. So the very first one is a lapse policy. When a policy lapses, it means for some reason you did not make payments for your insurance, and this is very frequent with temporary insurance than with permanent insurance. So for temporary insurance, because they don't have any fund value, there is no cash inside, so it's only the monthly premium that you pay that is able to sustain the policy. So the moment you miss it, most of them give you a grace period of 30 days, above which if you don't make the payment, you're going to lose the contract altogether. So you no longer have any insurance. So at this point, I think it makes sense that you cannot claim this kind of policy because you don't have a policy in the first place. Once it lapses, you don't have any contract. You fail to honor your commitment to the contract. So with the permanent insurance, there is a little bit of wiggle room because they have fund value or cash value inside. So you can miss a payment, you can miss a premium payment, and you still be able to catch up. Because of the existence of the fund value, you could make monthly payments to the cost of insurance until you catch up, you resume from where you left. So something to take note. So a way to fix this problem is always sign up the pre-authorized debit so that they will collect the money from your account monthly instead of you making the monthly payments, because for one reason or the other you get busy, you may be sick, and then you miss a payment and you don't even know about it. 30 days is a very short period. Before you know it, you no longer have an insurance. And I need to reiterate here, the reason you bought the insurance in the first place is because of your health, and while you're still healthy, you have to keep it pretty judiciously, because once you lose the policy, you may not be eligible to get insured anymore. You're no longer healthy the way you were before. So something to take note. And the second reason is concealing material facts from the insurance provider. Once they're setting up a contract for you, it's very important that you declare every information. By the way, some of the information is collected by default from the Medical Information Bureau. However, you still have to declare some of this information. I will just give an example. If you're a smoker and you try to conceal this information, for one way or the other, the information can leak out, and if it shows that you were smoking and you hide this information, that is a deliberate act. It's a reason for your claim to be rejected altogether. So something to take note. There are some other information that you can conceal, like your medical information. You were diagnosed at some point with diabetes. You may neglect it and think that it's just pre-diabetic. All this information, it could be publicly available, and if you try to conceal it without declaring, they consider as a way to conceal information from the insurance company. And when it comes to claims, this is a potential case for them to reject. So take note about that. The next one, not filing claim within the prescribed period. This is for some specific, not all the insurance plans. For example, I would take a critical illness. With a critical illness, there are some illnesses that are covered, and they will say, for example, if you are diagnosed say with a certain stage of cancer and you survive it within 30 days, or any other illness, just an example. If you are diagnosed and within 30 days you survive it, so you are eligible to make a claim. And then you have a certain period, a window to make that claim. So what it's saying here is if you didn't file the claim within that period, there are some events that can happen that can make you not eligible, because you may need to go back into time to trace your eligibility for making that claim, because your circumstances have changed from that moment. So there is always a reason for that. And if you have any doubt here, you need to talk to your advisor. And I will need to make a note here that when you're buying insurance, always consider getting a personal advisor, because an advisor in a bank or advisor in an insurance company is not really your advisor. They're just an employee, and one day they're looking for the next stepping stone, and they fly out through the window, Next point here is if you fail to undergo required medical examinations. If they already require you to do an examinations, I would recommend here from experience, take it, even if it fails. If it fails, then you know. If it doesn't fail, it has the potential of dropping your cost of insurance down. Once your medical goes well, your cost of insurance automatically will be at the standard rate. It will go down instead of the risk of rating you. So, and if you are requested to do medical, you have to do it. If you don't do it, even if you are issued a contract, this is just a case you're paying money for something that you'll never get. It's almost guaranteed. Don't put yourself in this kind of situation. If you have an existing contract and you know that you were requested to do medical, which you didn't do, you are in a very risky position when it comes to a claim. So the next point is contravening the coverage of the insurance. So you buy insurance and you think you want to claim something else. For example, I'll take the specific case of accident and sickness. Accident and sickness is one very unique kind of temporary insurance. You have to die from an accident before you make the claim. It's not any kind of death that you can claim there. Is specified. The name itself describes itself, accident and sickness. So somebody cannot die from a heart attack and then you consider this is an accident and then you want to make a claim. This is just an example. And the next point is the absence of a beneficiary. This actually really defeats the point of having an insurance. Why would anyone buy insurance and not put a beneficiary? Think about it. It's a huge mistake. Without a beneficiary, everything goes to the government. Particularly if you don't have a will, everything will end up going to the government. This is one of those cases that you say money goes to government. Yes. Why would you not put beneficiary in the first place? So at this point, I would say if you really don't have a relative, why even putting an enemy there is better, because you can end up winning the enemy to your family. That's the best way, the simplest way I can put it. There is no reason, absolutely no reason why you will not put a beneficiary. If you don't have a beneficiary, you can put my name there. We have a lot of things, a lot of people who need it. Just a side note, okay. And the next point, exclusions. Exclusions, it might come up in one of the points we have mentioned before. Things like suicides or pre-existing conditions. I mentioned this in one of the episodes before. Watch out. Normally you have to read your insurance contract, but in the case you don't read, the very least thing you should ask before you even set up a contract, what are the exclusions? You have to look out for those, because those are the things that will eliminate you from a claim by default before you even start the contract. So watch out for what are the exclusions in your contract, and if you already have some pre-existing conditions which will not be part of the contract, Those are things you should know upfront. And there is no point to go and make a claim if something were to happen, an incident because of one of those events is not covered under the contract. So it's pointless making a claim. The claim is going to be rejected. Suicides, this one is a delicate one. There are some contracts they give a period of up to 2 years that you cannot die from suicide, because somebody can just buy an insurance today and they plan to go and kill themselves just to make some benefit. But however, you need to get the details if it's only that 2-year window, or if it's an exclusion inside, that if for any reason at any time at any period during the contract you pass away from suicide, the claim will not be paid. You need to know this upfront. And if you doubt any of this, you need to talk to your advisor. I think there's no better way of emphasizing why you need to have an advisor. These points pretty much speak for themselves. If you don't have somebody that is your personal advisor, the advisor that you have at a bank, you may go there one day and they're not there. So these are some of the points that I put here for reasons why a claim can be rejected. I hope you enjoyed following this video. And once more, I thank you for watching, and I continue to ask for your comments, for your questions. If you have any comments, engage in the discussion and put them in the comment section so that we can discuss, we can respond to your questions. Watch out for the next episode that is coming, and thank you again. If you like what you hear, please click on the like button, and I will appreciate if you continue watching, if you subscribe to our channel, so that when the new episodes come, you can get the notification right away. Also share with those you think they can benefit from this information. Thank you.